Hi, Danny Gizzi with Aircraft Executives, and today we have KJ McCarter with Aviation Tax Consultants to discuss what everyone's been asking us lately. So we figured we'd bring in the expert on telling us about what's going on with bonus depreciation, where the tax laws and stuff are going today. So no further ado, you shoot at KJ.
Hi, KJ McCarter with Aviation Tax Consultants. I'm a CPA. Our firm advises exclusively on aircraft tax matters, so lots of income tax planning, and right now it's an exciting time. There's a growing optimism in our space that in July, new legislation will be enacted to bring back 100% bonus depreciation, which obviously the past few years there's been a gradual phase down. Now we're at 40%. Bringing back 100% could be very meaningful. So we're excited right now, and it's been a busy time for us.
Yeah, let's take a step back and let's talk about exactly what does bonus depreciation do for you, where it came about, where we are today, and then why everyone's talking about it getting back to 100.
So we're currently at 40% bonus depreciation. It's been phasing down 20% each year and is scheduled to phase down to 20% next year generally, and then 0% in 2027. So this new legislation would bring back 100% bonus depreciation, which the term bonus depreciation is a bit of a misnomer. We're not getting any extra depreciation, but we're able to depreciate, if we have 100% bonus, the full basis in the plane in year one, which is important for a number of reasons, but especially important because right now we don't have like-kind exchange for aircraft. Mm-hmm. So when a current owner goes to sell their current aircraft, they're having a big gain recognition event.
Sure.
And when we get 100% bonus depreciation back, we can quickly offset that with depreciation from the next aircraft. So it should be extremely helpful.
Perfect. Appreciate it. Obviously there's a lot of rumors going on as of just yesterday. There's rumors going around that bonus depreciation is going to be retroed from January 20th, 2025 to December 31st, 2029, 100%, and then to zero. There's so much speculation. So from ATC standpoint, what are you guys are predicting, seeing, or advising?
It's changing day to day. So we'll have to see what's in the actual bill itself. Obviously there's a lot of pieces within the bill that are not related to 100% bonus depreciation. Sure. And it's a bit of a moving target. So obviously the hope is that it's permanent, that we'd have 100% bonus depreciation with no phase down, no sunset provision, but we'll have to wait and see.
Okay. And from a tax perspective, as a professional, do you like the bonus better than like exchange, or would you like to see the like exchange come back? Or
I think the consensus in our space is that it would still be nice to have the ability to do 1031 like-kind exchange for aircraft. Mm-hmm. So I know that's been on a lot of tax practitioners' wish lists, that
Sure.
would be included in this bill. But the sense right now is that that may not be a high likelihood that we do get that back. 100% bonus, very much more likely is the consensus.
Sure. And so the tax bill this year that we're talking about, I think you mentioned July earlier.
Right.
So we saw something come out yesterday with some proposals that Wall Street Journal put out,
right,
and some other things, but it didn't talk about it in there, but we know it's in there with the rumor and stuff. So you think that this full tax bill is going to be released in July, but not go into effect, till back and forth?
That's been the latest update, is that at the beginning of July, that's when we may start to see movement. Okay. And in terms of when it would be implemented, it may just depend. So we should have more clarity that first or second week of July is the sense now.
Okay. All right. Well, we'll come back to maybe the bonus, but moving on from bonus, what are some other things you're seeing in your day-to-day transactions and stuff that are sticky points, maybe worthwhile educating future buyers?
Yeah, sales and use tax is a big topic right now because states are starting to get more aggressive about tracking and pursuing aircraft. So many states are starting to become more sophisticated in terms of locating aircraft that are based, hangared, and utilized in their state.
Sure.
In most states there's planning that can be done to either spread out or eliminate that sales and use tax liability. Mm-hmm. So it's very important that buyers properly plan ahead of time before closing to account for that sales and use tax liability, mm-hmm. In addition to just determining the closing location, which is important too. Wherever the plane's going back to be based and hangared is extremely important that we plan for that use tax too.
So can you elaborate a little bit more on a specific example of a sticky topic that you would want to be avoiding?
Yeah, so for example, if a buyer is purchasing a plane, let's say they're closing in Montana. Obviously Montana, no sales and use tax, so it's a great place to close. But if they're going to take the plane back to Florida to be based, hangared, and utilized there, regardless of where we register the plane with the FAA, regardless of if we use a Montana LLC to hold title to the plane, we will have a Florida use tax liability if we base the plane in Florida, unless we meet some sort of exemption. And there's a number of exemptions that can be evaluated, but that does catch a lot of buyers, especially first-time buyers, off guard.
Sure.
Their understanding is, if we close in Montana, we've relieved ourselves of any sales and use tax obligation, which unfortunately is not the case.
Got it. What else? So we got the bonus depreciation, how to take the tax depreciation at the beginning. You also got sales and use tax, and where you're going to be based and putting in the proper stuff in place. What happens, like, if you don't? What happens? Like, do they just send you a tax bill and then you got to thing, or is it more of like a federal audit on the bonus depreciation? Like,
So,
what are all the things that could lead that you're trying to avoid, and why it's important to set up all these things in the beginning?
On the sales and use tax side, generally you'll receive a letter from the state that essentially says, hey, we see you own this aircraft, it's based in our state, tell us why you haven't paid us use tax, or send us the use tax, cut us a check.
Sure.
So those are becoming more and more common as states start to track planes and become more sophisticated. So with proper planning ahead of closing, it's a letter that may still come in, but we'll have a response and we'll be able to claim an exemption, versus if you're not prepared and you get that letter, won't be many options at that point in time. So that's the state front. On the federal income tax front, it's been a topic of discussion how many IRS audits we'll be seeing in the coming years. There was a pronouncement that the IRS put out earlier this year stating that they were going to start auditing more tax returns that reported aircraft. But since then, there's also been a reduction in force within the IRS. So kind of conflicting forces. It's a little bit unclear how that's going to play out at this point in time, but it's still extremely important to follow the IRS's rules. And they give us a fairly specific set of rules to follow for how to account for an aircraft. Any new buyer should certainly connect with tax counsel to help them get a game plan in place for IRS compliance too.
Perfect. Let's see. So we covered bonus, we covered sales and state and use tax, we covered federal tax standpoint. Let's talk about sale of an aircraft.
Okay.
When we sell the aircraft, what are some things people need to understand about it if they took bonus?
Yeah, so when we sell the aircraft, we have a gain recognition event. Unfortunately, we have to recapture the depreciation that we took as ordinary income. Mm-hmm. So that's a common misconception, is that upon sale, it'll be a capital gain.
Yep.
Unfortunately, it's ordinary income. So that's one of the main reasons why 100% bonus is so important, that we get it back. Mm-hmm. Because right now, if you sell a plane, let's say you bought a plane for $12 million, bonus depreciated, now you sell it for $10 million. Mm-hmm. You have to recapture $10 million of ordinary income. Yep. Let's say you go out and buy a $10 million plane to replace the plane you had previously. Yep. If we get 100% bonus back, we can use the $10 million depreciation to offset the $10 million income.
Correct.
They offset each other, and we end up at a net zero for those two transactions. Versus if we continue this phase down, we have 40% bonus right now.
Sure.
We're left with a big tax bill in 2025, which is suboptimal. So unfortunately, there's not a whole lot of planning that can be done to avoid having that depreciation recapture. There's really no planning that can be done. It's unavoidable, besides purchasing another aircraft and depreciating that.
That makes total sense. Well, you hit my topic points. Is there anything else that you would like to add on to any of this?
Those are the high-level topics of discussion that have been circulating through the industry. So sales and use tax planning, as important or probably more important than it's ever been, to do a really good job on that front. And then we'll have another update on the income tax front, hopefully, at the start of the third quarter.
Perfect. And exactly, I guess we can close it out with, like, how far in advance should they be starting the pre-planning of the sales and use tax before closing on an aircraft? Like, we always like to introduce them at the beginning, and it's like, hey, if you're going to work with someone, here's some recommendations from us. When's too soon and when's too far out? When's the right amount of time?
No such thing as too soon. The earlier the better, certainly, to start kind of getting the wheels in motion in terms of setting up a sales and use tax game plan, talking about where the aircraft may fit in terms of the ownership structure for the aircraft. At the absolute latest, a month or two before closing
Okay.
is optimal. Certainly not after closing. It happens more often than you would think.
Yeah.
But the options are much more limited at that point.
Perfect. Got anything else to add?
No, I don't think so.
All right, well, you heard him. A month or two before closing is always the best time to bring in a tax consultant, and we'll be back in touch. It sounds like as soon as we get more information on the exact bill that gets passed and what that bonus depreciation benefits are going to look like. But we all know it will be 100% for this year. It's just how long, what caveats. But we can all expect 100% is going to happen this year is what the consensus seems to be.
Very high level of optimism that will be within this bill. So not a certainty yet, but a lot of optimism.
Sure. Well, thank you so much for your time, KJ.
Yeah, absolutely.
See ya.